Well, let's not get into, 4 times, 10 times the money. At this point, I'm wondering what's embedded in the stock price right now. It went from over 900 at the high in February down to 400, now back above 900, all in about, 15 weeks or something like that. What, in terms of production and profitability, do you think is now built into the share price?
At this point, I think the key issue really is around cycle time for the company ramping up these factories and being able to produce products. In terms of, what the actual numbers are, I think there's a lot of uncertainty around where the real production numbers will shake out. I think what we've heard from clients is that there's certainly some headroom in terms of the actual production numbers and sell-through numbers that folks are looking at. So our price target is based on just a little over 1.2 million vehicles sold in 2024. I think there's probably, 30% headroom on that in terms of where some folks are thinking about production levels are. But if they are able to actually ramp up in China and the way they've talked about the schedule that they've got in Germany as well, certainly there's upside to those numbers from where we're seeing some buy-side folks end up.
Yesterday's move was pinned to some production or sales numbers for the month of May, I guess, out of China. Big comeback in volumes, although, of course, after a bad April. How much of that is just catch up? What's the sustainability of the current sales levels in China? And what is it worth to Tesla? Obviously, there's some price cutting and some subsidies in there.
Certainly, if you look at where Tesla's at in terms of total volume into China right now, we're well below a percent of the actual in China for light-duty vehicles. So there's certainly a lot of room to run for them. In terms of the subsidies, there's a step down planned for early July, and that's driving some volumes. The company is prepared to take prices lower in line with those subsidies, I think, further and still maintain margins. And so the question for us really is, where do they get to from a cost structure perspective, throughput perspective on that factory to really maintain the margin on a per vehicle basis? And so far, we've seen them exceeding expectations on that front.
How about, in North America, obviously you have this massive unemployment at the moment anyway. U.S. automakers, no doubt about it, are going to be massively incentivizing purchases. So it's going to be pretty competitive, and we don't know what the consumer looks like. How much of that bears on what you can expect out of Tesla sales here?
Yeah, I think it's important to remember that there's a wide range of consumers for vehicles and in the economy, and certainly the high percentage of unemployed folks are not typically a Tesla consumer. Tesla consumers tend to be a little bit more tech savvy, have a little bit higher income. And a lot of those folks have actually ridden through the pandemic and this economic downturn pretty well. And so, what we're seeing is pretty substantial resilience in terms of that part of the consumer base actually continue to make purchases. As we go forward, it's difficult to tell what the secondary and tertiary impacts are going to be of the broader economic downturn. And so, we're watching this very closely. I think still there's an enormous amount of enthusiasm for this brand and for these products. And certainly there's been a queue of folks waiting to buy the products. And I think many of those folks are going to continue to move forward. But it's certainly an important question and one that we're monitoring very closely.